There's this 3-digit number that silently, secretly runs a huge part of your financial life. It can swing doors wide open for you, or it can slam them shut. For a lot of people, it's a total mystery. Well, today, we're going to pull back that curtain. We're going to give you the key.
So, what is this number? I mean, it follows you everywhere, right? When you're trying to get a credit card, rent an apartment, heck, sometimes even when you're applying for a new job. Any idea what I'm talking about?
Yep, it's your credit score. And really, it's pretty simple. It's just a snapshot of your financial habits, all boiled down into one single number. It's how lenders get a quick read on you, on how risky it might be to lend you money. The best way to think of it? It's basically your financial GPA.
And that GPA, it's graded on a scale. The most common one you'll see, the FICO score, it runs from 300, way down at the bottom, all the way up to a perfect 850. And obviously, the higher the number, the better your grade. It just makes you look more trustworthy. That 850, well, that's the A+ we're all shooting for.
Okay, so why do we even care about this number? Because look, understanding it isn't just about managing debt, it's about unlocking a whole world of financial opportunities. This score, it really is a powerful key.
Just think about what a good score actually does for you. It means lower interest rates on a house or a car, which can save you thousands upon thousands of dollars. It makes getting that dream apartment or a new credit card way easier. It can even mean you pay less for car insurance or get to skip the security deposit on your utilities. It's like a passport to a smoother and honestly, a much cheaper financial life.
So how in the world is this super important number calculated? Well, it's not magic. It's actually built on 5 main pillars, and each one has a different level of importance. Think of these as the 5 secret weapons you need to get a handle on. Let's break down the blueprint.
Okay, so the first and by far the most important pillar, this is the absolute foundation of your entire score. It's your payment history. This is where the story of your reliability really begins. 35%. Just let that number sink in. Over a third of your entire score comes down to this one single factor. If you want to master your score, you have to get this one right first. It's a non-negotiable.
And the secret? It's so simple. Just pay your bills on time. Every single time. Even one late payment can stick around and hurt you for years. But when you're consistently on time, you're sending a crystal clear message to lenders. You are reliable. That is the single most powerful habit you can build.
All right, next up, we're going to look at 2 pillars that really work together. They tell a story about your relationship with debt and about your greatest ally on this journey, time itself.
Coming in hot at 30% is amounts owed. Now, this isn't just about the total amount of debt you have. What's even more important is how much of your available credit you're actually using at any given time.
And this leads us to a golden rule of credit, the 30% utilization rule. See, lenders start to get a little nervous if it looks like you're using too much of your available credit. It can be a sign that you're stretched a little too thin. The sweet spot is to keep your balances below 30% of your total credit limit. And honestly, the lower the better. Maxing out your credit cards is a major red flag.
So, while keeping your debt low is something you actively have to manage, this next pillar just kind of works for you in the background. Your best friend in this whole game is time. It just quietly builds your credibility year after year.
A solid 15% of your score is determined by how long you've had credit. And why is that? It's because lenders absolutely love to see a long, established track record. It proves you can manage your credit responsibly over the long haul.
And that right there is why this piece of advice is so incredibly important. I know it can be tempting to close that old credit card you never use anymore, just to tidy things up. Don't do it. That old account is probably the anchor that's making your credit history look long and stable. If you close it, you could actually shorten your history and watch your score drop. Just keep it open, use it for a small purchase once in a while, and let it age like a fine wine. Okay, on to the final 2 pillars. You can think of these as the finishing touches, the strategic moves that really round out your financial picture and show lenders you know what you're doing.
So 10% of your score is affected by how often you're seeking out new credit. Every single time you apply for a new loan or a credit card, it creates something called a hard inquiry on your credit report.
The big takeaway here is just to be strategic. If you apply for a whole bunch of credit in a short period of time, it can make you look a little desperate or risky in the eyes of a lender, and it'll cause a small, temporary dip in your score. So just be thoughtful about it. Only apply for credit when you really need it.
And that brings us to the final 10%, the last piece of the puzzle. This one looks at the variety of credit you have.
It's what's known as your credit mix.
Lenders generally like to see that you can handle a few different types of debt responsibly. Things like credit cards, which are called revolving debt, and also installment loans, like a car loan or mortgage. But here's the key. Do not rush out and get a loan just to try and improve your mix. This is not something you should force. For most of us, a healthy mix just develops naturally as we go through life.
So there you have it. We've unraveled the mystery, we've decoded the blueprint, and you can see that the real power isn't in the number itself, but in knowing how to shape it. You now hold the key to your own financial future.
The path forward is really clear. This is your game plan, your 5 commandments of credit. Number 1, pay your bills on time, always. Number 2, keep those credit card balances low. 3, let your accounts age. 4, be smart and strategic when you apply for new credit. And finally, number 5, just let your credit mix grow organically over time.
What this all proves is a pretty simple truth. Mastering your credit score isn't some secret financial magic trick. It's just about understanding the rules of the game and then playing it with knowledge, discipline, and simple, consistent actions. You're the one in control here. We started this whole conversation talking about a key and the doors it can open. Maybe for you, that door is a lower mortgage rate, or the car you've always wanted. Or maybe it's just the peace of mind that comes with knowing you're financially strong. Whatever it is, the choice is now yours. So now that you have the key, which door are you going to open first?
Ultimately, mastering your finances isn't about magic. It's about knowledge, discipline, and consistent action. I hope this video has empowered you to take control. Keep learning, keep growing, and keep building the financial life you truly desire. If you're ready for more insights, make sure to like this video, subscribe to the channel, and tell me in the comments, what financial topic do you want to conquer next? Let's build wealth together.